Good morning, dear students. Today we will be seeing certain practical problems on past adjustment from the chapter Fundamentals of Partnership Account. Now, what is this past adjustment? Past adjustments are the mistakes that have been done while preparing the profit and loss appropriation account and how to make a correction of the same. So, we are having illustration today. Here in the illustration, you can see that in a partnership firm, there are three partners, Alia, Bhanu and Chand, who distributed the profit for the year ended 31st March 2017 of rupees 80,000 in the ratio of 3:3:2 without providing for the above adjustment. Number A, Alia and Chand were entitled to a salary of 1500 each per month, and number B, Bhanu was entitled for a salary of 4000 per annum. Pass necessary journal entries for the above adjustment in the books of the firm. Show your working clearly. So what the question says? The question says that there are three partners and they have a profit of rupees 80,000 on a particular year ending, that is 31st March 2017, and the profit sharing ratio is 3:3:2. Now this profit they have already shared without providing the following appropriation or adjustment. What are the appropriations? Number one was Alia and Chand were entitled to salary of 1500 per month, that is in a year, that is 1500 into 12, 18,000 Alia would have been getting and Chand would have been getting. Similarly, Bhanu was also entitled to a salary of 4000 per annum. So these were not given. Before that, the whole profit were distributed. Now what you will be doing for the same? First of all, you prepare a table showing adjustment, or known as adjustment table. In this table, you will be having four columns. First is partners column, Alia, Bhanu, Chand, and last is total column. In the particulars column, you will be correcting the mistakes which you have done. Okay, what was the mistake? First was the salary was not given to the partners. So there was what was the salary that was to be given to the partners? So Alia and Chand were to be given 1500 per month as salary. So you can see that the salary is now credited. Okay, whatever was not provided, you have to provide. So salary is actually posted on the credit side of partners capital account. So we are correcting the same. We are providing salary. Alia 1500 per month. So 1500 into 12, 18,000 is created. Similarly, at last you can see Chand is also same, 1500 into 12, 18,000. Similarly, Bhanu was also to get 4000 per annum whole year. So his salary is also given. So total credited salary is 40,000. You can see. Now same amount 40,000 now you have to take back as a profit, because profit 80,000 is distributed. So after providing 40,000 salary, this 40,000 profit is to be taken back or debited. So profit is now 40,000 debited in the ratio of 3:3:2. So Alia 15,000 debit, Bhanu 15,000 debit, Chand 15,000 debit. And after the comparison of each column, Alia's 15,000 and 18,000, you find that 18,000 is more. How much more? 3,000 credit Alia. Similarly, Bhanu, if you compare, you will find 11,000 debit is more by 11,000. Similarly, Chand you can find that credit is more. 18,000 is credit while 10,000 is debit. So 8,000 credit is more. So in that entry will be found in the adjustment table. You can find that Bhanu's account is to be debited with 11,000 while Alia's account to be credited as well as Chand account to be created. In this way the rectification is done. Okay, you remember that whatever has been corrected, same amount as a profit has been debited, 40,000. So that was the adjustment. Similarly, we are having a next question. In this question you can find that there are three partners and the sharing ratio of the partners is, profit sharing ratio is 3:2:1. After the final account has been prepared, it was discovered that interest on drawings at the rate of 5% per annum has not been taken into consideration. Okay, the drawings for the partners were X 1,50,000, Y 1,26,000 and Z 1,20,000. Give necessary adjustment entry. So you can see that again a mistake has been done. That final account, that is P&L appropriation, partners capital account, balance sheet has been prepared for the last year, but after that it was discovered or found that interest on drawings at 5% has not been charged or taken from the partners side. Okay, so 5% interest on drawings you have to charge, means you have to debit in the partners capital account. That has not been provided for. So what will be the interest on drawings calculation? So the calculation has been given. See, 5% of each drawings have been calculated. You can see in the solution, but for 6 months. Why 6 months? because the date of drawings are not given. Whenever a date of drawings are not given, it will be calculated for average period of 6 months. So X drawings comes to 1,50,000 into 5 by 100 into 6 by 12, that is 3750. Similarly, Y is 1,26,000 into 5 by 100 into 6 by 12, it comes to 3,150. And similarly, Z also same way it has been calculated, it comes to 9,900. Now what we will be doing, we will prepare again a adjustment table where we will debit these three amount, okay, because this has to be debited where they are not debited. So we will debit X account, Y account and Z account. See, you can find here adjustment table, partners capital account and total is given. Interest on drawings is debited in partners capital account, so we are debiting and it was not earlier debited. So 3 amount has been debited, okay. Total comes to 9,900. See, now same amount has to be created. Remember, whatever mistake you will correct in the total amount, you will find the correction is only interest on drawings. You have corrected, you have debited, okay, because it has posted on the debit side of partners capital account. You have debited. So total debit is 9900. Same amount will be adjusted as profit, remember, because you have in total column you have to make nil or nullify the amount. So 9,900 you will be creating the profit, okay, creating, because debit is there on interest and capital, total 9,900, same amount will be created. Say 9900 is now created in profit sharing ratio, which is 3:2:1. If you divide 9,900 into 3:2:1, then X will get 4950 credit, Y will get 3300 credit, Z will get 1650 credit. Next you will compare each column, X column, debit and credit you will compare, and you will find that X is having 1200 excess credit, so difference is credit 1200. Similarly, Y 150 credit, and similarly Z 1350 debit. So you can find that Z is debit 1350 while X and Y are credit, okay. So the entry is automatically formed. See, journal entry, this is rectification entry, adjustment entry. Z capital account debit 1350 to X capital account to Y capital account, and adjustment entry of omission has been passed, okay. So these are the past adjustment question. Kindly see and try to understand. Thank you for today. Thank you.